I thought it was fascinating to get a chance to talk to Frank about, as I say, he's so international in what he does now in philanthropic work. And by the way, congratulations. A 1-year-old baby.
Yeah.
That's very impressive.
Yeah, she's really cute.
Yeah, that's
My wife's right there.
I was going to say, so it takes after your wife.
Yeah, very beautiful.
Yeah, lovely.
Yeah, please, thank you.
It's kind of very exciting. So you've got enough on your plate.
Yeah, thanks.
So we do appreciate you coming here, sincerely.
My pleasure, seriously. You know, it's been 11 years since we did this.
Is it, eh?
11 years since we did this last.
Well, I was saying earlier today, I show it. I show every year. Let me just start with this, though, sort of to get it out of the way, the Trump tariffs. Your take on them, where are we going with them?
You know, it's, I'm sure as everybody's aware, Trump is very unpredictable, and I think he likes it that way. I'm not exactly sure what he was trying to achieve with respect to Canada. It was either a false flag using the fentanyl immigration thing, or he wanted to please his base and show them a win, that he's a powerful guy. Then there's always the theory that he's trying to bring manufacturing back into the U.S. and also create an external revenue source to offset the income tax cuts that he wants to make. I don't think any of those things are going to be workable, in my opinion, but he's certainly the type of guy that will use a cudgel in a negotiation. His style is come in and say really outrageous things, put everybody on their back foot, and then hope that something reasonable is put forward, which everybody would be more than glad to accept, other than the other issue. But you have to understand, and I think this is where Canada really screwed up. Henry Kissinger once said, America does not have allies or friends. It only has interests. And Trump is the embodiment of that sentiment. He really is. And now we're learning the hard way that we should have perhaps thought about diversifying our export markets and not be put in this situation where we've got a gun to our head.
I mean, obviously, you've got a really long background, successful background in resources. So it seems to be that one is the main area that we didn't take advantage of. It seems the goal was to derail oil and gas or fossil fuels, let alone, metals. They've just discovered we might want to do something with them.
Yeah, I think we're a bit late to the party, and I think we need a different kind of leadership in this country that really focuses. I was on, and thank you. Hey, Gordon, I'm starting to sound like a politician. No, we really need a different kind of leadership in this country. We were woefully unprepared for what Trump threatened us with. We have nowhere to go. 75% of our exports go to the U.S. We have not diversified our markets. We're one of the most rich mineral countries on the planet. And we're doing nothing to exploit those resources, and it takes a lot of things to exploit those resources, but first and foremost it needs leadership, and we haven't done it. So we're sitting in these huge oil reserves. We've got all the critical minerals that are necessary for the transition to clean energy, which is what the world is after at the moment. I just came back from Saudi Arabia, where I spoke at a conference there. Saudi Arabia has this Vision 2030 now, and it's really to transform their economy from a fossil fuel-based economy to a clean energy economy. And they're out there spending tens and tens of billions of dollars to secure all the critical minerals that are going to be necessary for that transition. They want to bring that stuff home, refine it, process it there, and manufacture the products that electric vehicles, batteries, et cetera. And in Canada, and where are they looking? Africa, because the entire world is in Africa right now fighting over resources, and we could talk about that if you like. But here we are in Canada, we've got all these things, but we're going to need, the leadership that will create the infrastructure. You need ports, you need LNG terminals, you need pipelines, you need roads and rail to remote places where these resources are. You need to trim the permitting and all the red tape that takes 10 to 15 years to put a mine into production. It's ridiculous. It's really, we have such confusing, illogical policies that contradict each other, and we wasted, I think the last 10 years have been a real waste. Now we're the Rodney Dangerfield of the G7 economies. We're at the bottom of the pile. And it's tragic when you're a Canadian. You're watching your Canadian dollar sink to almost nothing. It's ridiculous. And you can tell I'm very passionate about this.
Well, I think one of the silver linings of the Trump tariff threat is that more Canadians are becoming aware of this. You know, I made the comment just last night saying it is just so ironic that the very people who fought fossil fuels now say it's our most valuable asset in that trade war.
Yeah.
But it's brought the reality. But the point you're making, I really want to emphasize, is that you can't, and we read this, as you know, they'll say, well, why don't we just sell minerals somewhere else? Why don't we just sell our oil somewhere else? As this is a case of snapping your fingers. So we won't need pipelines. We don't need, you know, the ability to offshore. Man, we're miles behind on this.
Really, and you know, to create the infrastructure necessary to have those export markets takes years and a lot of investment. And you know, it's got to be some private-public partnerships, all sorts of things. The rest of the world is getting very creative about this, and we're sitting back, you know, being very polite, saying we're sorry about everything. And it's just, no, but it's true. And you know, it's time to. We need to change that attitude.
Yeah, our biggest export is apologies. Let's come back to the Canadian dollar for a second, because, you know, I'm always sort of evangelical about trying to get people to understand. I mean, this is where your standard of living gets. You know, nobody's standard of living goes up because your currency becomes devalued. So your take on the Canadian dollar, we're below 70, and I'm not looking for a trading advice, but it's more the trend advice.
Yeah, no, it's just, I think, like I said, we're the Rodney Dangerfield of G7 economies. We were at the bottom of the pile in terms of real GDP growth in all of the G7 the last 10 years. It was the lost decade, I think, was it, The Economist came out with that article. Yeah, no, it's just, we've focused on the wrong things in this country, and we've created this culture of really talking about things that are not really important to the well-being of Canadians. We need economic policies. And I'll give you a perfect example. One of the dumbest things, it drives me crazy. You know that Canada is, on the one hand, banning Chinese investment in companies that, Canadian listed companies that have either assets here and even assets in other parts of the world, nothing to do with Canada, they're just listed here. And Canada bans Chinese investment in those companies. So what are those companies doing? They're moving their listings to other countries and getting out of Canada. And on the other hand, we allow our pension funds, which is about $3-4 trillion worth of pension funds, are mostly invested in China. And more in China than in Canada, and the amounts that they've invested in Canada are in government bonds. They don't even, you know, we can't even get our own pension funds. You know, other countries have sovereign wealth funds. You know, Saudi Arabia and China uses a lot of government agencies and organizations to achieve its geopolitical strategic goals. And here we are, we're just dying on the vine. And I think, again, it's tragic.
Let me just localize just for a second into British Columbia, because to me they would be compounding the problems from people in the mining industry. I see, you know, anecdotally, but people backing off. Resources in general, but mining for sure. And they seem to not recognize that they're compounding the problem.
Yeah, no, they are. We need Gordon Campbell back. Everybody, he's sitting in the front row. That's why I'm picking on him. Yeah, no, seriously, it's you know, why do we have two layers of permitting process, federal and provincial? So you have to get your provincial permits, your federal permits. Why can't we streamline, get rid of all that red tape and bureaucracy? It takes 10 to 15 years to permit a mine in this country. I've financed mines in Latin America and Africa that take 18 to 24 months. Yeah. That's all it should take. And again, it's just us getting in our own way.
Speaking of that, and as I say, you've got a global perspective, but when you talk to people even in our country with the mining, is that what they're saying? Like, are they just not even considering us? Are they just saying, you know, there's just too many other attractive alternatives for our capital?
100%. Like I said, I was just in Saudi Arabia, and there is a global race at the moment. It's almost a war to secure critical minerals, because there's going to be a deficit of things like copper and lithium and cobalt and nickel, and all these things that are required to make this transition to clean energy are forecast to be in deficits. We don't know where those things that metal is going to come from. So there's a battle, especially in places in Africa where you've got all sorts of geopolitical competition in the Sahel with the Russians and the Qataris and the Americans, the Chinese, and you know, everybody's in there fighting. And we don't recognize, we're sitting here on a treasure trove, and we don't recognize that this is a golden opportunity for this country to really create wealth and create jobs. And it's there. It's not like we have it. The capital markets have, sorry, I'm losing my voice this morning. institutional investment capital has left this country, and especially in the resource sector. You know, I mean, 20 years ago, there were literally tens of billions of dollars of funds available specifically for the resource sector, and now it's down to about $3 billion in total in the entire country. I mean, that's nothing.
Yeah.
And you know, and you know, you've had this whole ESG movement, which was well intended, but it literally labeled mining across the board as being a dirty business. And so a lot of institutions, you know, the BlackRocks of the world, just wouldn't touch mining just as a matter of principle, but they weren't connecting the dots. You know, you want clean energy? These minerals aren't going to fall out of the sky. You have to dig them from somewhere. And this is the part that the disconnect that's taking place. So yeah, we're starved for capital in this country, really starved for capital, especially in the resource sector.
I want to move to something that you've written a great deal about and been ahead of the curve on this, and that is that combination of sovereign debt, implications, the gold sector, you know, all of that I want to cover. So let's start with the sovereign debt. I mean, are you concerned? Does it have an end point?
Yeah, and if you're not concerned, you should be. You know, the world's got $315 trillion worth of debt, which has basically doubled over the last decade, okay? We're in a debt trap that is inescapable. We cannot get out of this debt trap. It's impossible. We never pay back that debt. It's growing at too fast a rapid rate, especially at the sovereign level. Especially at the sovereign level. You know, the 2008 financial crisis was a private sector crisis. That's been kicked upstairs now. The next crisis is going to be a sovereign debt crisis. It's happening. And it's not just the United States, not just Canada. It's Europe, it's Japan. It's the entire Western world, as we know it, is under a tremendous amount of debt. And the only way out of it is to restructure the global monetary system. You can't, there's no other way. We're heading towards a cliff. Everybody knows it. Nobody wants to talk about it. But we all are aware that this has got a moment where it will end. And it will end very, very badly. But there's no will by the policymakers to really address, you know, they talk about it. You know, in the U.S. they talk about raising the debt ceiling, which is the most ridiculous farce I've ever seen. You know, they've raised the debt limit 80 times since 1960. It's a farce. You know, they have all these arguments. They go right to the 11th hour, and then they cut a deal, and they raise the debt limit again. And it's just an ongoing conversation. But to actually tackle the debt and the deficits, no one is really willing to do that. And I'll give you the U.S. as an example. That, to me, they're the ones that are in the most dangerous spot at the moment, given the level of debt and the size of the annual deficits, which are currently running around $2 trillion. If Trump gets his way with these tax cuts and everything that he's hoping to do, that deficit is going to go to $3 and $4 or $5 trillion a year. You know, the math simply doesn't work if he wants to give all those tax cuts again. And you've got, you know, as I said, $37 trillion of federal debt. You have, more importantly, you have $100 trillion worth of unfunded liabilities, social security, Medicaid, all these things. And it's like, I don't know if you guys ever seen that movie, Don't Look Up, you know, about the asteroid coming to Earth, and everybody's kind of ignoring and denying it's there. It's like that, you know, they know that this thing is going to crash into the Earth, but nobody is willing to do anything about it. And I'll tell you why. If you add up all the non-discretionary spending in the budget, and you add up the military defense spending and interest costs, that's 86% of the federal budget. There's nowhere to cut from. There's just, you know, you can cut at the margins. You know, as, you see Musk is in there, you know, trying to kill this federal agency and that federal, you know, that's going to save a few billion here and there. But when you're talking about trillions, and we talk about trillions like we're talking about football scores. Yeah. When you're talking trillions every year, you can't make a dent in that if 86% of the budget is untouchable. And there's a whole herd of sacred cows in that budget that people in Congress are not willing to cut. And the problem is, the big one is the Social Security stuff, okay, the untouchables. Yeah. And when you think that Americans have to go through an election every 2 years and they're a 24/7 campaign cycle, no one will dare. It would be political suicide to touch, you know, those benefits. You wouldn't get voted in. So, you know, so when I look at it in a very realistic way, realistically, there's nowhere to really cut that will make that much of a difference. And what Trump is proposing, in my humble opinion, is going to make the deficit worse, okay? And if he really goes through with putting tariffs on the rest of the world, which he's talking about, he's going to launch some more on Monday or Tuesday, that, if you study the history of tariffs, Smoot-Hawley Act of 1930 in the U.S. is a perfect example, Global trade grinds to a halt because if you put a tariff on somebody, they're going to put a tariff on you. Then you devalue your currency, then they devalue their currencies, and you get a currency war. And then eventually, you stop all diplomatic relations, people get sort of focused inward, and trouble begins. And I always say, when the trading stops, the shooting starts. And that's the most dangerous part of today's world that we're in. And if we get into a global trade war in the way that Trump wants to wage this war, and hopefully he's just using it as a cudgel, as a threat, in which, but if he goes through with some of this stuff, other countries are going to retaliate, and you're going to have this very, very dicey situation. China's not going to sit back. They're already banning the critical minerals. They control 80 to 90% of the processing and refining and the production of all the critical minerals that are necessary. And they're saying, okay, we're going to put a ban on these exports. Hey, America, hey, Europe, you're not going to get any of this stuff. And we don't have another source that is immediate. It's going to have to be worked on. It's going to take years. So, yeah, no, I think that the debt part and the deficits are definitely going to come to a conclusion. And there's only two ways to deal with it. You either have an international accord like we did with Bretton Woods after 1945, and you reset the monetary system in some other fashion that, and I have some ideas how that might work, or it's going to be forced upon. It's going to be forced upon America, Canada, Europe with a fiat currency crisis. And this is why you're seeing gold going through the roof. This is why all the central banks around the world, outside of the G7, have been buying gold for 15 years and now at an accelerating pace. And now they're draining all the physical supplies out of the Western vaults. It's all going east. India, China, Russia, Saudi Arabia. China and Saudi Arabia are buying it very covertly. We have people that have been tracing the flows of gold as it goes through the refineries in Switzerland. It's ending up in Saudi Arabia and China. They don't declare all the gold that they buy. Mm-hmm. And you have to ask yourself why. Why, as you know, you said I started my business as a trader on trading desk. Yeah. So the first thing you learn when you're a trader, when you're accumulating a position, you don't show your hand. You never show your hand because you'll get front run. People will front run your order. So the idea that you have all these countries around the world buying massive amounts of gold, and here in America, here in Canada and America, all you see on the news is Bitcoin. They don't even acknowledge that gold has outperformed the S&P the last 25 years. Gold has been one of the greatest performing assets since 1971. And the media will not acknowledge it, Wall Street will not, they won't even talk about it because it runs against their narrative. The narrative is everything's fine with our system, everything's fine with the US dollar, and that's how Wall Street makes their money, by being at the top of the game of that global financial system. And of course they're not going to talk about gold because it's the whistleblower. Yeah. It's telling you something's wrong. And the rest of the world's figuring this out. So here's where I think it's going to land. I don't think that the US will voluntarily restructure the monetary system without it being forced upon them, okay? I just don't see politically why they would do that. I think that you have to see a crisis first before they'd actually sit down. They're going to try different things. Trump's already threatened to impose 100% tariffs on any country that even considers creating a BRICS unit. This is the talk about a BRICS currency with the BRICS countries. Okay, that smells of desperation. When you have to threaten countries to use the US dollar, or you're going to tariff them. 2, it will accelerate the process. It's going to backfire because people are going to go, well, I got to get out of this system before it happens. And you're seeing it already. China's dumping treasuries like crazy. They were at $1.2 trillion. They're down to $730 billion now. And they're sold $50 billion in the third quarter. They keep selling. They're getting rid of all their US treasuries. They don't want to be sanctioned like Russia was. So, you've got all this kind of a perfect storm. You have the U.S. sanctions, which started all of this mess, because that's what drove people away from the dollar. They de-dollarized because of fear of sanctions. They were going, we don't want to be the next ones on the naughty list. Mm-hmm. And, America has sanctioned, 1/3 of the world is under U.S. sanctions. 60% of the countries that are under sanctions are poor countries. So you can't blame them for wanting to try another system. So they're exploring other systems. But I think that it will end up being forced upon them, and then you're going to have, and here's my theory, okay? I may be completely wrong, but here's how I think it's work, because I've connected the dots, and I've been writing about this for many, many years, and I used to get laughed at. People would say, oh, Tina, there is no alternative to the US dollar. Warren Buffett said, where are they going to go? Where are they going to run to? Well, they're finding those mechanisms as we speak. They're finding many mechanisms. So here's what I think is going to happen. There's a project called M-Bridge. I don't know if you've ever heard of it. Look it up. M-Bridge. And the M-Bridge project is it was a 5-year pilot project set up by China, Hong Kong, Thailand, the UAE, and Saudi Arabia has just joined. And the BIS, the Bank of International Settlements, was also involved, although they recently backed out, and I imagine was under US pressure. Here's how it works. All of these countries have central bank digital currencies. What they're achieving is to do all the net settlement of currencies for their bilateral trades using a central bank ledger. So it goes outside of the US dollar system. It has nothing to do with the US dollar. And so when you looked at these countries have set up M-Bridge, and there are 69 countries now that are in advanced stage of setting up central bank digital currencies. There's another 44 that are in the exploration stage. So the world's going the digital route, and it would be an infrastructure that would sit outside the US dollar system. And so these same countries that are the M-Bridge are the same ones that are de-dollarizing and the same ones that are buying gold. So what does that tell me as a potential outcome here? Back in the Middle Ages, when gold was money, they had these things called bills of exchange that merchants used. Right. So a bill of exchange was that you were trading with partners and you were passing these bills of exchange around, which represented your gold holdings. They were representative of gold. And if at the end of the day there was a deficit between two trading partners, they would settle it with physical gold. So I'm thinking, why are all these countries loading up on gold? Gold is now taking over the euro as the number 2 reserve asset to central banks. It's only second to the dollar at the moment, and it's gaining fast. So what would you do? You would have this M-Bridge. You have bilateral trade agreements between two countries using their own local currencies. And if you end up with any unwanted currency, let's say Saudi Arabia ends up with a lot of yuans that it can't use in its bilateral trade, on a periodic basis, you exchange that for gold. And you can already do that on the Shanghai Futures Exchange. You can exchange yuans for gold if you're a sovereign. And so they're setting up this mirror system to the Western international financial system, and it's going to be very competitive. And I think it's obviously going to draw away demand for US dollars. Now, I'm not saying that the dollar is going to go out of business, but it is in danger of losing its supreme reserve status, which has kept America in the gravy for 75 years.
Let's, in the time, we don't have much time left, so I want to talk specifically, and you've given us the answer, but we'll just reiterate, I'm looking at how individuals protect themselves too, and people listening here, and one of our big recommendation has been gold. It seems to have worked out. No, but as you're saying, new highs. So do you expect that trend to continue? If you were closing your eyes and, there's ups and downs and all around.
Yeah, gold is volatile. It started, let's say in 1971, it started at $35 an ounce. In 10 years, it went up 27-fold from 71 to 81. Then it went kind of quiet for a while. And then in 2001, the second phase of that market started, and it went up 8-fold between 2001 and 2011. Yep. We're now in the third phase, which I think is going to be the most explosive phase. And how far gold goes, I have no idea. I've never predicted the gold price. But what people need to understand, and this is where people get wrong, the gold price isn't going up. That's not what's happening. What happens is that a fiat currency is devalued against gold. Gold is the constant, just like the speed of light is the constant in general relativity, and space-time's fungible. Gold is a constant. It's the fiat currencies that get valued and devalued versus the gold. So what's happening is that people are losing faith in fiat currencies, and they're valuing gold higher. And I suspect that if we ever get a global consensus to change the monetary system, the easiest way to do it is exactly what America did in 1933. They basically, first of all, they tried to confiscate everybody's gold. So listen, if they try and take away your gold, don't give it to them. Because what they did next, so they made a law in the US that everybody had to turn in their gold, unless it was jewelry. But if they had any gold coins or bars, they had to turn it in. A few months later, they devalued the dollar or revalued gold from $27 an ounce to $30. They screwed their own citizens for 70% haircut. So. And by taking it from 27 to 35, they were devaluing their currency to create more credit and reserves. So the Europeans thought about doing this after 1971 when Nixon closed the gold window, basically the Europeans felt betrayed. You know, we were told that your money was as good as gold. Now we can't get our gold,
Right.
and they started having this conversation about collectively they had more gold than the U.S. The U.S. Had the single largest position, but collectively the Europeans had more, so they could conceivably or theoretically raise the gold price to another level, pick another price, and create more credit and reserves. And that, if the whole world agreed, how you clean up this mess with all this debt, the world says, okay, now gold is going to be 10,000, I don't know, pick a number, I don't know what the number is, I'm not going to throw numbers around, but pick a number that represents a fair backing of the money supply. And Britain and the U.S. had anywhere between 20 and 40% backing of their currencies before World War II. So pick a number that gives it some sort of a backing. And then just revalue gold, say, well, gold tomorrow morning is going to be 10,000, 15,000, whatever the number is. It may sound ridiculous, but it's not really ridiculous when you think what's happened in the past. And then you just reset the entire system.
Let me ask you just quickly, as time's passed, but why aren't the gold shares performing better? I mean, you're so familiar with that market too. So why, just your take on why haven't the gold shares matched the kind of move we've seen in gold, or it's just a timing thing, they will catch up?
I think they will catch up. I've been horribly wrong about my predictions that once gold did break through, and it broke through last year, that the gold stocks would follow immediately, and they didn't. They didn't. Well, now you're starting to see the seniors start to really catch up, like Nico Eagle and those companies. But no, I think it's a combination of things. That mining, as far as institutions were concerned, was considered a dirty business. They just avoided mining companies. And I think to an extent that's still happening within the institutional equity sector. I think that there are too many companies. I think there needs to be consolidation. I think there are far, far, far too many junior companies. And they're the ones that find all the deposits. They make the discoveries, not the seniors. And there's just too many of them burning too much overhead. And then there's the crypto distraction. You know, people want to speculate and gamble these days. They do it with crypto, with Bitcoin, with meme coins, with all sorts of crazy stuff. And that's where the crazy money's going. You know, we used to get that speculate, because hey, junior mining investment is, you're speculating. You're hoping, you're taking on some risk. It's not a lay down. So all that froth has gone to there, and that's captured the imagination of at least the American investing public. But I think as gold, if the margins, if you're producing gold at $1,500 an ounce, and now it's $3,000 an ounce, and then it's $4,000 an ounce, eventually people are going to run into this. Yeah, absolutely.
Well, Frank, I want to thank you for taking the time. Spectacular as usual. But I also want to say, I read Frank at Frank Giustra on Twitter. He publishes articles. I always follow them. And I invite you to do the same thing, talking about these very subjects. Frank's been on top of them before they made sort of the public sphere, I'd call that, with a warning, including, bullish on the gold before the move started. So, Frank, I invite people to do that. But in the meantime, just know how much we appreciate you finding time today.
Michael, a pleasure. And don't make it 11 years.
No, I won't. And I'm always worried about taking your...